All righty, welcome everyone to the trade findings and adjustments for Tuesday evening, the 18th of February. I'm going to go over three things tonight. The first one is simple. Be careful when it comes to all the bullshit out there for advisories or trading education. So out of curiosity, when I'm going through this, what is the key point? How do you know if it is real? Someone tell me, how do you know if it's real? I like it. So someone's paying attention right now. Actually, there's two of you that are paying attention right now. Give me a quick second. I'm going to get those answered. So yes, the first one is you see a real account when they teach / give you a trade. I agree. Second thing, and I agree 100% with this. I'm going to reword it just a little bit though. You read the disclosure, which is what I think you're trying to say, and see if it accurately describes their advertising / comments. So that's what I want to start on right now. There are two otherwise that mention no annualized gains. They show all their trade history in a real account. So I'm going to go back to the real account. Trading real money. Bingo. You see a real account. So I was just going off to an advertisement that Jeffrey Dunyan gave me in regards to this Andy Crowder, right? And he just sent out something that has like 100% return since October 24th. Now it's amazing because there were 6 weeks of like no trades in there. And then as he showed their gains and everything, all of a sudden you have like a 600% return. Now, when you see a 600% return from Andy Crowley, I think is the guy's name. Crowder. I question how he got there, because all that was on the advertisement email was an Excel spreadsheet, which I kind of find rather interesting. I mean, I throw up all my stuff on there for the whole world to see. But as I went through, why would you put every dollar into the trade, even your profits? Because for me, that equals gambling. And it always works until it doesn't, then you lose it all, right? And the second thing was the disclosure. So I went through and I'm kind of reading things, and yeah, it's just all the same garbage you see all the time everywhere else, special reports. So I get down to the disclosure. Legal notices, right? Investing in securities carries certain risks for loss just as much as it represents opportunities for profits. Our investment news editors have researched investments mentioned in the marketing promotion and special reports. The opinions included herein are those of the author and are made using publicly available information. We are not a registered investment advisor. They are not qualified enough to take their tests and give legal investment advice. Money manager or broker dealer. Every investor is advised to conduct his or his own research, due diligence, and consult with a financial advisor before making investment decision. So even though you're spending $14.95 and $5,090 and one-on-one mentoring and for $3,995 and these newsletters and these weekly issues and trade alerts, all this stuff, don't listen to it because you're supposed to go to your own financial advisor before making a decision. And this is the killer right here. Potential future returns or income claims made in this promotion are based on a combination of calculations, historical data, and the evaluations of our editors. One more time here, right? Potential future returns or income claims made in this promotion are based on a combination of calculations, historical data, which means they're back testing the shit out of this stuff, right? And the evaluations of our editors. What should that sentence say if they were doing it for real, right? What should that say if they were doing it for real? All claims made in this promotion are backed by brokerage statements. Bingo. I love it. That's what it should say, right? Bill, I'll write you a check for that comment. Recommended by Kevin Hurley. Yeah, I wish all my trades were going the way they're supposed to, right? The claims and projections and estimates cannot be guaranteed and should not be considered as such. The claims, projections, and estimates, not the returns. The claims, the projections, and estimates cannot, capital letters, be guaranteed and should not be considered as such, which I'm just shocked. I'm ridiculously shocked. Because the claims are, if you need an extra $2,000 a month, you grow your portfolio from a $25,000 portfolio to a massive six-figure fortune, winning 92.5% of your trades, and he complains he has a 100% return since, this October 24th of last year. 555.3% in total gains in 2018 and 19. So they've had 1,000% return. I personally guarantee you an opportunity to more than double your portfolio in the next 6 months, right? I personally guarantee you'll have the opportunity to more than double your portfolio in the next 6 months. But does any of that coincide with their disclaimer at the bottom? Does any of that coincide with the legal notices set at the bottom? Not at all. Of course it doesn't. And it's a bugger. It really, you sit there and you scratch your head, and you think to yourself, how can you peddle this BS and in the small print completely contradict pages of garbage of what you're looking at? Who does this come from? It comes from the Wyatt Research Group, your free webinar. Look at these claims every single week. High predictive profitable trades. Wonder who the hell Mike Boble, Darwin Moore, Todd Ebert are, you know? Oh, there's our disclaimer to cover our butts. Notice how the dark print all up here, right? And the legal notices you can barely see. Barely see. I didn't even go to terms of use. Wonder what that says. Oh yeah. Oh my gosh. I have gone through this. Shocking. Shocking. For not being registered and them talking like they're registered and that, oh, we can't trade 2 days before and 2 days after, and it goes on this special list and blah, 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 blah. Oh my gosh. It kills me. It kind of just pisses me off, to be honest with you. So, word to the wise. When it sounds too good to be true, that's because it is BS. So don't get stuck in it. All right, new trade. It's a simple trade. New trade, some of you will already see it in your accounts. I'm frustrated. The market is not helping me out right now. And I really was hoping that the 1275 would hold. It didn't seem bad. It's sad when you're trading on hope, right? But GE is coming out of its funk. GE is now moving in a way that I like what I'm seeing on GE. So, where's my GE order? So some of you might already see it in an account. I guess I'm going to have to go to my own stuff. I am looking at GE. It was actually brought to me from a client of mine, and I really like the trade. It's a rather cheap trade, a 1520 leap bull call. Notice the extended hours were back up 5 cents. It's trying to get in between. I was trying to get in at 59 cents all day long. Couldn't get in. Got in at 61 cents. But we're looking at a 61 cent leap bull call on General Electric. Now, to be 100% honest with you, I want the time. I want the time so I don't have to make a decision every single day on exactly what I need to do. I don't know. The market is getting ridiculously difficult to understand. It's just hard to see the trends that are supposed to be happening in our market. And in all honesty, I'm looking for a cheaper trade to be in that gives me the time to be wrong and the time to adjust. So, I like the chart pattern. Yes, we could be turning, but for 61 cents, I can wait. It's a cheap trade with 10 contracts. It's $610. But what I like most about it is the risk to reward. A maximum profit in January of next year for a 66% move on a stock that's lost over 80% of its value. A risk to reward, one risk for a 7.20 reward. Maximum profit, $4,390. But I don't need a maximum profit. A 200 or 300% profit would be amazing. Kevin, your maximum loss, you're probably for maximum loss is 70.292%. So someone please tell me, is that correct? Is the maximum loss probability really a 70.92%? That's a tough one, huh? No one's really coming out and saying, well, maybe, right? That's a tough one to answer. Expiration with the current movement, yes. That would be a tough one to do. But last year in 2018, actually, I'm sorry, in 2018, it was at $20. Last year, it rose from 7.5 up to 12.74. So again, Kevin, isn't this a shot in the dark? Aren't you swinging for the fences? Well, with all due respect, 12.74 minus 750 is a profit of 524 divided by 750 is a 69.86% return last year. I'm only looking for a 66%. I'm just looking for things to go back to profitability. And what is one of the key forces for profitability for General Electric? What would move these guys another $7.25? Someone tell me, what would move these guys another $7.25? Bingo. There you go. Boeing. Boeing getting its planes recertified and starting production. I agree. I would think exactly the same thing, David. That would be my look-see or my my trigger would be Boeing. Looking at the position altogether, it's cheap. It's a cheap trade to be in. And the uncertainty, I'm not sure I want to risk a whole lot of money. It's cheap. If I'm going to dollar cost average, if it's going to lose half its value, $305 gets me into dollar cost averaging and doubling up on it. I like it. What I really like, where was it? Thought I took a screenshot of it, but apparently I didn't. What I really like in this one is the opportunity to make a portion of 4,000. That's why I didn't see it. To make a portion of $4,390. And the fact I have all year for things to run the same way it did last year for General Electric. Now, some people ask me about Apple. And for crying out loud, I'm also having problems with my account on getting level 3 trading. So here I'm in all these leap long call positions because they can't get my own Hurley Trust up to level 3 trading, which doesn't allow me to do spreads right now, which really pisses me off, even though I've got another account with that opportunity and that level trading ability already ready. But Apple, you will notice today I took off half of our Apple verticals, and I did it at 205. I didn't panic in the morning and take them off at 165. I took off half at 205. I think Apple will still move above 325 in the next 2 weeks. Reasons why. Oh my gosh, Apple's going to have a backlog on their phones. Can someone please tell me, out of the 15 that are here today, minus Kiev, has Apple had a backlog on their phones in the past? Yes, thank you. I've got 3 yeses that came in immediately. When has Apple had a backlog on their phones? When does it take 4 weeks to receive your phone? Bingo, of course. Every time a new phone comes out. So today we sold off some of our Apple positions at 205. I'm taking half of the risk off the table, and I'm now letting these positions run, literally looking for a maximum return on the next 2 weeks, try and get out of the trade for no less than $4.50. That is my new exit for this trade. I am closing the trade at a limit price, a limit credit price of $4.50. I almost rolled down the 325s and created a calendar. And thank God I didn't, because the sucker's already back up to 319.75 and our futures are looking good for tomorrow. Apple's been in as much as a 6-week backlog, and it's supply and demand. The supply and demand for Apple has put them in a backlog in the past plenty of times. So I can afford to sit through a backlog opportunity on Apple. The key is, will people get in touch with reality and do so in the next 8 trading days? That is the risk I'm taking. Really, anything above 450, I make up the dollar, I still make 50 cents. But the risk was too great to keep the positions on. If you take them off tomorrow, you can take off half your risk at a better price than what I did. And you'll be in better shape than I am. Pretty amazing. As I looked at my trust account, unbelievable that I actually made $85 today. I just scratched my head, little frustrating. Way to go, Facebook. Way to go, Visa today. Baidu sucked a lot. Disney wasn't helpful. Ford, I need to be able to dollar cost average those here in the near future. Waiting for another crack at Under Armour and looking to dollar cost average those in the near future as well. So it'll be interesting to see what we do overall with our positions. But kind of a crappy start to the year. Other than Apple, I'm not worried about any of my current positions. And I will look to take some profits off of them the first opportunity I can get. But it's amazing when you can look a little longer term. If all of my portfolios were at new highs, I'd have a portfolio way over leveraged to the upside than the momentum stocks. If I had all my portfolio that was all at the lows, I'd be out of business, right? It's okay to have a mixed portfolio. It's okay to have some winners and losers. The keys: take profits off of your winners and have some plan, some number, some justification to stay in your losers till they come back. Have the patience to be able to be in them. Are there any questions about what I'm doing on Apple? I know a couple people have called. Any questions about what I'm doing on Apple or what I'm trying to do there on Apple? Or any questions in general that I can help out on? Apple, February 28, 2020. Full call at 320, 325. Took half off and leaving the rest for a $4.50 limit credit order to exit the trade. And taking half of the risk off, I took a 90-cent loss. And so I'm trying to gain that 90-cent loss back and still make a 60-cent profit on the remaining half that I have in play. But there's just, so the question, Well, Kevin, why didn't you roll down a short call? I almost did. But in order to do that, first thing this morning, the stock was already down $7.80. And it finished down less than 5. Or about 5, right? I guess less than 5 is not correct. Let's find out how much it really came down. That's not going to help us. Came down 5.95. It's already up 75 cents in after hours. Glad I didn't go down to 305. I'm running out of time. I'm running out of time in the trade. And when I'm running out of time and I'm trading on a little bit of hope here, I'm going to take half the risk off the table. Any other questions or any other explanations I can answer for you on Apple? Look at the new GE trade. We'll get this published here tonight sometime, maybe tomorrow morning, because I'll be honest with you, got back from an amazing weekend with my boy in a soccer tournament. Took first place. It was absolutely amazing. Lovely to see. Love to see the team come out on top. But the call for today at General Electric, January 21, 1520 bull call. I like the numbers behind it. I like the opportunity behind it. It was brought to me by a client who saw something, and as I worked my numbers behind it, great opportunity. As for an adjustment on Apple, if you take half off tomorrow, you'll be in better shape than I was. No reason to have the full amount in play right now with the uncertainty that we're seeing in Apple stock and in the market as a whole. So go ahead and take some risk off the table. It's just not working the way I want it to. If you do have a higher risk tolerance than I do, you can feel free to stay in it. I'm just going to say myself in good conscience, I had to lower the risk in that trade. I had to take half of it off, and we'll see where we end up with the other half. Setting an exit trade at $4.50, limit credit, good till canceled for the Apple trade. Guys, have a wonderful evening. I appreciate the time with you. I look forward to seeing us Thursday morning, which Key will be taking over for me. Thursday morning, I've got to do one last little skin cancer check, treatment, zap me by a little bit of radiation or something like that. And I'm good to go. You guys take care. I will see you next Monday. And if you weren't able to pay attention, or if you missed an email, you should have had an email that canceled yesterday's commentary, but an email that came out with a link so you could watch the commentary yesterday pre-recorded. I do hope that was helpful for you guys. Guys, have a wonderful evening. Appreciate this time with you, and I look forward to seeing you next week. Bye-bye.